Hi, Larry Berman here, and here's what's on my radar this week. Late Friday afternoon, options, quadruple witching, looks like the market's trying to reverse some of yesterday's move. Obviously, we got surprised this week. I didn't. I actually thought the Fed was going to begin the discussions, given their rhetoric of late of several of the Fed members, that it's time to start talking about unwinding some of the balance sheet. I think it's a policy mistake because I think the market needs the liquidity. Now, if they're willing to let equity markets sell off in a big way as bond supply dominates in the back half of this year, then taper they should. So we'll see how that all plays out. We saw some comments this morning and basically saying that maybe it's time to stop borrowing mortgages. We don't want to create a bubble in the housing market. So you're getting a lot of that rhetoric. Now, does that mean energy stocks and banks should be going down? Well, yes, the yield curve's going to start to flatten, but it should really have never gotten this steep anyways. So I'm not sure that that's fully priced into the banks. I don't love the banks here, but I do think we're reopening. I do think there's going to be more demand for energy. I do think there's been a huge underinvestment in energy, and the energy names still make sense. So I think you buy the dip there, and then you probably fade big tech. There's no reason, given my sort of perspective here, why you would want to ramp money into big tech here with these valuations, unless you're just rotating money out of the reopening trade into that. So I think you can reverse that trade from a tactical perspective. And I think there's a lot more upside in the energy names in the reopening, notwithstanding this week's surprise. So a lot of people got caught leaning one way and heavily in one area. They're unwinding that. We saw that in the Canadian dollar this week, that really was going nothing but reopening and reflation and commodities, and all of a sudden whomp the other way. Now, where should the Canadian dollar trade? Probably, big grand scheme of things, 75 cents to 85 cents to the US dollar. Where are we ish right now? Very close to the middle of that range, fair value-ish. Couple cents on either side trading range. Look out into the end of the year. So I think we're okay from that perspective. A lot of moving parts. Markets are starting to get exciting, but it doesn't change the facts that we have monstrous bond supply coming in July, August, September. That should stress financial assets and ultimately see global equity markets pull back a little bit. So still on the cautionary side, our Pro-Eyes series of indicators are certainly up in the cautionary range. This is not the time to strap on risk other than for extremely short-term trading. And I just don't play that game. We're tactical in what we do, but trying to trade for the next dollar on an ETF is not what we look at. We try to be far more strategic. So, bull call of the week. Let's flip around some of what we saw this week. The energy stocks were leading. We saw a big pullback. There might be a little more to go there. Buy the dip. An XLE below 50 to me would be a no-brainer. Where is it trading now? 52.5. So again, maybe there's 4 or 5% more downside. Buy the dip there. And in terms of on the other side, I'd sell the Qs here. Is there a little bit more upside? Yeah, not much maybe for a trade, but where's the biggest risk in the marketplace when markets overall correct? I gotta think it's in the overvalued names. Anyways, have a great week, everybody. Enjoy the warmer weather. Happy summer, everybody. Longest day of the year this weekend, my favorite.